your screen. Thank you, sir. I got my popcorn ready. Wow. Like every week it's a show, huh? Hey, I don't mind. More red than at a bullfight. Man, speaking of bullfights, the K-Win show. Speaking of bullfights, I've actually watched some, and man, some of them, the cowboys that ride the bulls, man, those could be like pretty darn brutal, I gotta say. Um, but anyways, uh, yeah, it's pretty red, and that's the tough part, right? I know this week, I mean, one of my favorite setups this week was actually Okta. I talked about it with Bernard as well. Genuinely, like I saw the accumulation. But the problem is most trades aren't going to work. These breakouts aren't going to work in a very poor market environment that we've just been seeing, across the board. And it's really just humans at the end of the day. Like if I could bring up like this is all normal to me. I mean, at least I feel like it's normal. It might look bad, but again, it's sort of like a narrative, right? You look back in history, like humans have always panicked. If it looks kind of like a market panic, sure, but it's nothing new if you really think about it. Like anyone remember Y2K, year 2000? You guys remember Y2K, right? I'm sure the folks in here, most folks are old enough to remember Y2K. The whole like, potential end of the world because most of computing when we, started computing in like what, 60s, 70s, whichever, like, Silicon Valley started in like 71, right? 1971. Uh, uh, we didn't consider like what would happen when the clock or the calendar goes from 1999 to year 2000. So, 00, and again, like most systems, I guess you could say, for data efficiency, they didn't have like the whole, January 1st, 1999. Instead, it was like January 1st, 99. So a lot of systems would move those two digits, those two front digits, the 20 or the 19, whatever, to basically make it more data efficient. And then they didn't take into consideration of like a potential bug where 00 would, you know, potentially end the world because if it didn't work out, if we had an actual Y2K situation as we were thinking, then, let's say banks wouldn't work, right? Banks would crash, airplanes wouldn't work. You can't go out and spend money. The whole system would collapse essentially, and we'd go into conflict. So that was a major concern, right? And so that's one pandemic. Oh, I'm sorry, that's one panic, not pandemic. We also had a pandemic, another panic, right? We got through that. So, it's time and time again. Now it's just like you see the market sell off so hard on like tariffs and stuff like that. It's I don't know. I think we're gonna bounce eventually. The question is, April starts essentially next week, and dumb money. I'm sorry, smart money confidence is pretty darn high. Like they want to participate. So essentially, this is what we're dealing with. And look how beautiful, beautiful we just traded around the 200-day moving average, right? That's basically the line in the sand. We definitely got the bounce, right? Maybe I was like a week late, 1 week late on the bounce, but we did get the bounce here. We bounced to the 200-day moving average. Again, this is the S&P 500, folks. We bounced to the 200-day moving average and hit resistance. So the way the market reads that is that, resistance right here, it seems like we want to get back to volatility. So then now we're pushing down lower. So the pink arrow, again, that should have been the expected resistance, and we confirmed it, right? Because now we sold down. As you can see, it's not always perfect. And so what happens next is we need to find or identify the next line that the markets are playing off of. And the next line that you can see right here, the markets are playing off where the black arrow is pointing at. So moving into next week, we collapse below that the black arrow portion right here, this line, then we see 550 next. We collapse the 550 low, we're going to go even lower, right? How low? Maybe this becomes right now we're at a 10% correction as you see the teal box right here. That's a 10% correction. If we go lower, then measure from high to low, then maybe a 15% correction is down to 520-ish. And if we get a 20% correction, well, it's going to go a little bit lower, but um, that's just how it is, right? I mean, around this, I've seen something like this before, right? And one scenario that I have in my mind that I'm projecting out is you might be surprised, right? Like we end up bouncing right here and we don't clear the low. Because right now, again, the market is it's a an apparatus for a discovery mechanism. That's what the markets are about. So these institutions right now, at least the large money that's being influenced to move around here, they're trying to figure out where the markets want to go. So one scenario I'm thinking is that we can still bounce right here and then reclaim the 200 MA, in which case that second reclaim of the 200 MA, that's a great trade, right? Like you might want to, I mean, again, if you're doing tactical trading, you're doing near-term trading, because because the logic is we hit resistance here on the 200 MA, we came down, and now we're trying to push back up. So that second reclaim could be really good actually. So that's something to consider. Now, on the other scenario is again, it's very dependent on the two arrows that you see right here, right? If we could reclaim back towards the pink arrow and go higher, we actually move higher towards the 50-day moving average. If not, then the other scenario is we break this line and then we go to 550, we break 550, then we go lower to like quickly like 540, I would say. So that's basically the scenarios that I'm seeing right now. It's a tough market environment. I'll admit it's freaking it's hard. But we kind of know this, right? Like in a way where it's like the environment's not good, so it doesn't make sense to like really size up on any position with conviction. Because remember, like if we watch the markets long enough, we know that the best environments should be like hand over fist, like super easy. Like from what I've seen in cycles where the money is just really easy, that's like the environment's really good. The money is really easy. So we got to remind ourselves, like, yes, it's tough right now, and if you force it right now, you're likely to just, get what's the word? Get burnt out from the volatility. So we just want to like keep, take it easy, let the markets figure itself out. I don't think we're going to go, and I don't think we're going to collapse, right? If we do, right, okay, if we do collapse, and we already know the next points that we're watching right here. Right now, the markets are basically in a range between this line right here and this pink line right here. So we're trying to figure out up and down where we want to go. That's essentially all the markets are doing. And it looks like I can no longer do LinkedIn Live, so that sucks. But hey, it is what it is.